What kind of trader are you? A patient wave rider or a fast-paced shot caller? In this video, we'll explore swing trading versus day trading to help you find the style that fits you best. Swing trading captures medium to long-term price trends. You wait patiently for the right moment to ride a big market move, timing your entry like a surfer catching the perfect wave. Once you've entered a trade, you let it play out over days or weeks, occasionally checking the charts. This laid-back nature of swing trading makes it easier to manage alongside other life commitments like a full-time job or studies. However, trades are held overnight, leaving them exposed to sudden news or volatility that could turn things against you while you're not looking. A promising trade at bedtime can turn into a loss by morning. If holding overnight trades makes you uneasy, day trading may be a better fit for you. Day trading is more like a fast-paced video game, demanding quick decisions and intense focus for hours. It targets smaller, frequent price moves within a single day. It also avoids the risk of overnight market swings since positions are closed by the end of the day. As you're trading on a smaller time frame, opportunities come more frequently, but not without its own challenges. Preparation still matters, but so does your ability to act fast and keep emotions in check when the pressure is on. This can be especially challenging due to the constant mental engagement in day trading, and impulsiveness can quickly lead to a string of losses. Not to mention that more frequent trading also means higher costs, such as trading fees and commissions. So, which trading style should you pick? Well, the choice ultimately depends on your personality. If you're patient and prefer a relaxed approach, swing trading lets you focus on bigger trends and wait for the right moment to pounce. But it takes discipline to sit back and let the market do its thing without overthinking. If you thrive in high-energy environments and are good at making quick decisions, day trading may be a better fit. It's much more stimulating and demands focus, stamina, and precision. Your goals and resources matter too. Swing trading involves fewer trades, lower costs, and less upfront capital, making it more accessible for those easing into trading. Day trading, however, involves more frequent transactions and a good chance of bigger initial losses while learning. Needless to say, both styles require discipline and a well-thought-out trading plan to perform well at. Ultimately, the best strategy is the one that aligns with your goals and personality. So take your time, experiment, and build a trading routine that keeps you confident and engaged for the long term. If you're new to trading and not sure where to start, check out this video for tips to build your very own trading plan.